Okay, let's picture this. An apartment, right? Valued at 1.9 billion Korean won just a few months back,
Hmm.
suddenly drops 570 million won. That's
Wow.
a 30% dive. And, this isn't some made up scenario.
No, this is real.
It's happening right now in South Korea's housing market. We're talking areas like Bunding places that were like the absolute symbol of real estate
Yeah,
success.
top tier areas.
So for this deep dive, we've gathered some sources talking about these housing market woes and a mortgage crunch.
Right.
Our goal today, let's unpack these reports, really get to the heart of it, and help you understand what's actually driving these huge and honestly really sudden shifts.
It's the speed that's striking.
Exactly.
Yeah.
The speed and the impact have just left a lot of people asking what's going on underneath it all.
Yeah, it's definitely not just a simple market dip. This feels different.
How so?
Well, we're seeing a really rapid adjustment, and it seems heavily influenced by some pretty significant changes in how the market works, fundamentally. So it makes you look beyond just what happened, You have to ask why it matters so much.
Right. So let's dive in. Our sources, they all seem to point to one key thing, this one event that really kicked things off.
Hmm.
The 627 measures. Now, loan regulations might sound a bit, well, dry.
Sure does.
But how exactly did these specific rules cause such a big impact, especially on how buyers felt? It seems like more than just market nerves.
That's exactly it. The key here, what the sources really highlight,
Hmm.
is that these 627 measures weren't just about, vague sentiment.
Yeah.
They specifically tightened the rules for borrowing money.
Hmm.
Things like needing bigger down payments, maybe lower limits on how much you could borrow against the property value.
Wow. Okay. Direct impact.
Direct impact. It immediately changed who could afford what.
Yeah.
It wasn't just about confidence. It literally restructured transaction conditions, as one source put it. The actual rules of the game changed overnight.
And you can really see that playing out, especially in the high-end market, right? Like in Seonyeomsi, Bondango.
Absolutely. Bundang's a prime example.
This place was hot. I mean, really sought after, prices soaring. A real success story.
Until now.
Yeah, now it's a different picture. Take the Amai Dongbu Korean apartment. It's, 163 square meters?
That's the one.
Sources show it hit 1.9 billion won back in mid-March.
Peak price.
Then, just a few months later, July 21st, it sells for 1.33 billion.
That's the 570 million drop. 30%.
30%. Can you imagine buying just before that, thinking prices would keep going up?
Oof. Yeah, that's rough.
And importantly, this wasn't some, off-market deal. It was brokered.
Right, a market transaction.
Hmm.
Which really underlines that this is the market setting the price now.
And then there's the immediate fallout. Our sources talk about contracts being canceled almost instantly.
Yeah, deals that were basically done.
Exactly. Like Sampyeong-dong, Botdul Village, 59 square meter unit, contract signed for 1.5 billion won on June 27th.
The day the rules were announced.
The very day. And boom, canceled immediately.
Incredible timing.
And another one, Sunadong, Purine Village, 131 square meters, 1.95 billion. One contract signed June 24th, just a few days before.
Yeah.
Also canceled on June 27th.
These cancellations, they're more than just numbers falling through, aren't they?
Seems like it.
It really represents this sudden realignment of buying power. The financial ground literally shifted under people's feet.
Right.
Imagine you're days away from buying this huge life purchase, and then suddenly the rules for getting the money change completely.
Yeah.
It just shows the power of these regulations. This wasn't just buyers getting cold feet. Their ability to actually make the deal happen might have just vanished.
So, okay, that's the drama at the top end. But the market isn't just one thing, right? Our sources also show a contrast.
Different areas reacted differently.
Yeah, what about places with, say, lower-priced homes? Like
Yeah.
Yeoju or Ansong?
Those areas, according to the reports, saw much more stability, less affected by these specific measures.
Interesting. And then there's Incheon. Bit more complicated there.
A bit more nuanced, yeah.
The median price dipped slightly from about 379 million won down to 360 million. Not huge.
Not like Boomdang, no.
But the volume of sales, that really dropped. More than halved, from over 2,000 transactions down to just 804.
That's a big freeze in activity.
Definitely. And specific spots like Yansugu and Namdonggu saw prices adjust downwards.
Yeah.
And what's interesting is in places like Gyeonggu, Gupyeonggu, Segogu, prices for similar size units dropped even when the actual private space in the apartment stayed the same.
So it's not just about getting less apartment for your money. The value itself is adjusting downwards.
Seems like it suggests a broader recalibration happening there beyond just unit size.
And if you connect these dots, these different regional reactions,
Yeah.
it tells you something about how the market is responding to the new lending environment.
Like what?
Well, it kind of suggests this split, maybe, a flight to stability, perhaps.
Yeah.
Lower priced properties, maybe less reliant on heavy borrowing, seem more resilient.
While the high end, the boom areas.
They're taking the hit, yeah. It really shows how fast changes in liquidity and borrowing conditions can ripple through different market segments in different ways.
Which brings us to the big question, I guess. And our sources get into some expert analysis here.
Right.
There's a quote from a Jikbang official. Jikbang's a major real estate platform there.
Familiar with them?
They say the Seoul metropolitan area market basically slammed on the brakes after 6/27, went into a wait-and-see mode, short-term drops in sales, areas sold, and prices.
Okay, wait and see. Makes sense.
But, in any downturn, don't people just get nervous and step back?
Yeah.
How do we know this is different? Is it just psychology, or is it this realignment of buying power you mentioned?
That's the key distinction the sources try to make.
Yeah,
While psychology, fear or caution always plays a role.
sure.
The official's insight, and what seems supported by the data, is that this goes beyond just feelings. It's a shift driven by concrete changes. The actual loan environment, the funding situation, has changed.
So the market isn't just nervous, it's actually operating under new constraints.
Exactly. It's
Yeah.
adapting to new institutional realities,
Mm.
not just taking a breather. And that leads to the crucial question, really, for you listening. Is this sudden shift just a temporary blip, a distortion?
Or is it the start of something bigger, a structural market transition?
Precisely. And the official themselves says, look, additional observation is needed. We can't know for sure yet.
Right.
We should probably expect this wait-and-see period to stick around for a bit as everyone, buyers and sellers, figures out how to navigate these new rules.
Okay, so let's try to wrap this up. What's the main takeaway here for you? It seems South Korea's housing market is going through a really profound change,
Definitely.
driven hard by these new loan regulations, and it's causing these shocking price drops in places like Bundang and this general freeze, this wait-and-see feeling everywhere else.
Yeah, and like we said, whether this is just a pause, a temporary distortion, or if it's a deeper, more fundamental restructuring that's still playing out.
The jury's still out.
The jury is absolutely still out.
Yeah.
But what's just fascinating, I think, is seeing how quickly a market can react when you change the lending taps. It affects everything, top to bottom, almost overnight. High-value homes,
Yeah.
overall sales numbers, everything shifts.
It really makes you think. We've seen here how regulations can reshape a market so fast. So, final thought for you listening. What other kinds of things, globally maybe, could cause such rapid shifts in housing? And if you were watching this unfold, what signs would you look for to decide if it's truly a new reality, a structural change, or just, a temporary adjustment?